Hi, I'm Andrew Lowe, and today I'm honored to be talking with Professor Robert C. Merton, School of Management Distinguished Professor of Finance at MIT and a Nobel laureate in economic science. By applying high-powered mathematics to real-world problems, Bob has transformed the way academics and practitioners think about investing, risk management, retirement planning, financial regulation, and of course, derivative securities. Bob, welcome, and thanks for joining us today.
Well, it's a great pleasure to be here, Andrew.
What's the basic economic risk in this? It's residential housing. What kind of residential housing? Not rental, owner-occupied residential housing. Okay? And that's where the variation is coming from. I just want to remind you where the source of the variation is. Every large institution in the world, endowment funds, pension funds, sovereign wealth funds, insurance companies, all of them have equities or risk assets. And they all have what they call core equity or something like that. Let me get this straight. Your job is to get the best diversified world market portfolio till we go to Venus or Mars. That's it. And here's an asset class which is larger in the market portfolio than the entire stock market, and you own none of it? Does that sound well diversified to you? Why do you choose MSCI World instead of MSCI World instead of MSCI Hong Kong? Because you got convinced, as many others, it's the world portfolio is more important, the better diversified portfolio. I have an asset class here that's bigger than the whole freaking stock market that's not being represented, and it's now going to be represented. Okay? I don't think he's going to have a lot of trouble, and I think he has a shot of being core equity manager of the year if he pulls this off. You're assuming the indexes are given by God forever. The principle of index and benchmarking, yes. But what index do you use? What's going to get turned around is anybody who has an index that doesn't have this in there is going to look like an idiot. What else out there? Let's think about derivatives. Do you think if somehow we got this going, where we had all of these mortgages, all of these equity pieces out there, do you think this could become a big market? If it becomes a big global market, do you think anyone will think of having derivatives on it? You bet. They'll be climbing over each other. This is a dream for risk transfer and derivatives. They'll slice it and you'll have higher priced houses, middle priced houses. At some point, they'll have it by zip codes in the United States. I mean, the number of ways of doing it, not to say you have to, there'll be a huge derivatives market. It's a natural. It's a natural because it's a natural global market where you want to do risk transfer and where some people will take the risk, but they don't want to risk expropriation of their capital. So it's just perfect.